31% this year because of the earthquake back in March. On the plus side, the company is anticipating having all the parts it needs to get back online into full production this summer. And sales, it says, will bounce back strong in the second half of the year. Watch TM, because that is Toyota's stock that trades here in the U.S. This is a clash of the titans. Germany's finance minister versus European Central Bank President Jean-Claude Trichet. Germany says it will approve. Certainly, investors will be alert for any headlines over the weekend. As you know, a lot of these meetings are made over emergency conference calls. Keep in mind, there's a big meeting coming up in about 2 weeks. Euro area finance ministers meet on June 20th. June 23rd and 24th, right, the European leaders meet. We'll expect to see some sort of resolution. Do the bondholders, the investors, share in the pain of this bailout? ECB President Jean-Claude Trichet sticking to his guns yesterday, making it very clear that they are opposed to that. That would only roil financial markets. Germany today, in fact, the lower house approving a non-binding resolution supporting the extra emergency loans, insisting that it sticks with investors sharing in that pain.
All right, we'll track what happens over these next few days. Thank you so much, Sara Eisen. Meantime, I'm out here in our newsroom and taking a look back.
The 10-year yield trading as we speak below 3%, a very critical level. It tells us that confidence in this recovery has been shaken. It's great if you decided to wait on your dream home.
But what we're talking about, as we referenced at the beginning with Germany, isn't just happening here in the United States.
No, this is a worldwide phenomenon. Rates are moving lower across the board. In Canada, government interest rates are near the lowest point since November. In Germany, the German border up 173%. Those are called the dim sum debt because they're yuan bonds sold in Hong Kong. Investors are clamoring for anything that has the China boom story written all over it. They're clamoring for the Chinese yuan, but it also speaks in general to the popularity of bonds just around the world right now as this slowdown bites and investors want to store their money in somewhere safe. That pushes down the borrowing rates. It's tough for savers, but on the other hand, if you're a borrower, it's looking pretty good.
The continuing and perhaps amazing story of the declining cost of borrowing, we're going to be talking about it later this morning with Carl Lentz of Credit Suisse. Now, while the cost of borrowing, as we were just saying, drops at least